This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Russia faces a steep drop in oil income if U.S. President Donald Trump successfully pressures India to stop importing Russian crude, because losing its top purchaser of seaborne exports would force Moscow to slash prices to find other buyers, analysts and traders said. Trump on Monday cut U.S. tariffs on Indian goods in a trade deal he said also included provisions for India to halt oil imports from Russia, the world's second biggest oil exporter. The United States is putting pressure on Russia to agree a peace deal in Ukraine. Trump has over the past year already claimed that Indian Prime Minister Narendra Modi agreed to stop buying Russian oil.
Investors rushed to lock in oil prices at record levels in January amid concerns around Iranian crude supplies and more Venezuelan barrels heading to the U.S. Gulf Coast. Hedging can help producers reduce risk and protect their production from sharp moves in the market by locking in a price for the oil. It can also give traders opportunities to profit in times of volatility. Investors traded a record number of WTI Midland at Houston contracts, a price benchmark for exported U.S. crude, with 1.9 million contracts trading on the Intercontinental Exchange last month, exchange data shows.
Moving on to the top news in the energy sector.
Discounts on Russian oil exports to China widened to new records this week as sellers cut prices to lure demand from the world's top crude importer and offset the likely loss of India's sales, traders said. Price cuts for China came after U.S. President Donald Trump announced on Monday a trade agreement with Indian Prime Minister Narendra Modi that included halting oil purchases from Russia, but without giving details on how and when. A halt by India would make China the only major client for cheap Russian oil. The world's second biggest oil exporter is already struggling with falling demand from India due to Western sanctions, with Russian oil in floating storage rising.
Reliance Industries has partially offloaded a jet fuel cargo in Italy, India's first export to the region since a European Union ban on products derived from Russian oil took effect on January 21, data from ship trackers and trade sources showed. India is one of the top buyers of Russian crude, and market players are closely monitoring its refined oil exports to Europe for signs of trade disruptions that could drive up prices for supply from elsewhere. The EU's ban on importing products produced from Russian crude is aimed at curbing oil revenues Moscow uses to fund the Ukraine war. Next, we have the top news in metal markets. Commodities prices slid on Thursday, led by silver, part of a broad market sell-off as investors reversed an earlier rush for hard assets after global geopolitical tensions eased. Silver tumbled as much as 15% and oil prices fell more than $1 a barrel after the U.S. and Iran agreed to hold talks, and after a positive telephone call between the leaders of the U.S. and China. Commodities joined other financial markets such as shares in lurching lower as some of the speculative heat came out of markets that had been propelled to record peaks.
Iron ore futures drifted lower on Thursday, as high inventories that underscored steady blast furnace production left little room for price hikes. The most traded May iron ore contract on China's Dalian Commodity Exchange ended daytime trade down 1.73% at 768 yuan and 50 fen, $110.72, a metric ton, declining for the fourth consecutive session. The benchmark March iron ore on the Singapore Exchange was 1.71% lower at $100.75 a ton as of 0707 GMT.
We will now look at the top news in the agricultural sector.
Chicago soybeans extended gains on Thursday after U.S. President Donald Trump said China had raised a target for U.S. soybean purchases under a trade truce. Corn and wheat ticked up with spillover support from soybeans, though a firmer dollar and easing weather concerns capped the cereal markets. The most active soybean contract on the Chicago Board of Trade was up 1.1% at $11.04 minus 1/4 a bushel at 11:44 GMT. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.